Hey, it's Clay Trader, and this will be a video chart on ticker symbol DRYS. We will take a look at the 15-minute time frame. Real quick, what do I mean by 15-minute in case maybe you're new to charts? Instead of each one of these candlesticks representing 1 day's worth of price action, which is what you would normally see, each one represents 15 minutes. So while this may look like a couple weeks worth of time right there, it's really just the past couple of days broken down into 15-minute time slices. I did this analysis on Wednesday, so that's where these different colored annotations are coming from. But certainly want to get things updated as you know the questions that I was proposing on Wednesday. Remember, the markets were closed yesterday for Thanksgiving, but those questions from Wednesday, have all been answered. And depending on what your outlook was, meaning if you were looking to go long or short, then yeah, your opinion would be different. But as far as I'm concerned, this nice move here that did happen, let's give some credit where credit's due. That was all fake. There is no true strength behind that. It was in trader lingo, that was a dead cat bounce. Now, what is giving me the right to say that? Well, simply put, I think we can all agree on this, that bounces that are true bounces continue to bounce, right? They don't go back to where they were. I'm assuming I kind of just insulted your intelligence, and you're saying, well, thanks, Captain Obvious. Of course, a bounce is a true bounce if it continues to bounce, not going back to where it was. And that's what happened here. Where was the price before the bounce started? Well, the price was right down here within this range. Like I said, I think we can all agree on that. Where did the price close today? Right down here. So again, when you match that up, well, the price is right back to where it was before the whole bounce started, and that's just not a sign of true strength. Now, can a new bounce start? Can the bulls try to regain strength? Yeah, absolutely. I'm not saying that the bulls can never get any sort of strength again, but another way to put it was it's back to the drawing board. Bulls got to start all over again, and again, by no means am I saying they can't do it, but straight back to the drawing board. They got to start from scratch. So with that being said, going to go ahead and just get rid of that line right there since that trend line's been broken. And then this area of support that I talked about on Wednesday, that needs to be updated, and this comes from just a foundational aspect of charting. When levels of support are broken and closed below, they tend to act as resistance. So right there at $5 and about 88 cents. The other level of resistance to keep an eye on is going to be the purple line right there, the 50-period simple moving average. So keep an eye on those two levels of resistance with any sort of bounce. As far as supports are concerned, pretty straightforward. Last time the price got down this low, the bleeding finally did stop down there at about $5.35. So that is definitely the key level going into next week. So we'll see if the bulls can put something new together or not. One of the most popular questions I get is, hey, Clay, how do you find the stocks that you trade? So what I've done is put together this free resource guide where I talk about the tools that I use to locate stocks that I find interesting and think may have potential. So if that sounds like something that could add value to you as a trader, then by all means, click right there to get access to the guide. The guide itself is very short and to the point, and like I say, it is free. Thanks for watching. Have a good weekend.